Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. Hey, everybody, Tom Gentile. Welcome to Patterns and Profits. Glad to have you here Monday, August 10th, 2026. You know me, I'm America's #1 pattern trader, here to help you discover patterns that repeat and profits that add up. You can help me out by liking and subscribing to the channel. Hit that notification bell. If you click on all, you'll get all my videos once they're uploaded. And one more thing, you probably already know this is not investment advice. Past performance isn't indicative of future results. So let's get started. You know, this was a really interesting weekend for me. If you guys check out my YouTube channel, then you know that I did a post over the weekend. What a rare weekend I had. So I have well water where I live. You know, that's the risk of having something with a little property on it. So on the well, anyway, the pump house, we had an explosion, a water explosion. One of the pipes burst. And I posted the picture of the connector, the female connector just actually unraveled. I had water everywhere, hitting the electrical panel as well. And so I had to go in there, shut the well off with the panel, and luckily not get electrocuted. And then my brother and I went to fix this thing. So we put brass fittings in instead of plastic, because that was part of the problem. So no water in where I needed water. You know where I had water? In the attic. And you don't want water in your attic because and I'm talking about in the forms of humidity. So as I was humidifying the pump house, putting water in it, I was dehumidifying the attic. I'm happy to say that both of those problems have been solved, hopefully longer than temporarily. But, you know, it took the whole weekend to do that. But you know what was great is that anywhere I ran into a problem, my brother and I ran into a problem, we'd open up YouTube and we'd punch in, need help with blah, 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 or whatever it is. And we find a few videos and find someone that actually knew what they were doing. So I have got someone who knows what he's doing on the program today. We're going to talk about optimal trading with Mike Wade. We're going to talk about our market update this week with key risks. And of course, it's Money Calendar Monday. So I want to discuss really the top ETF that I see as we go into the month of August. This is a crazy month, and I've got a live webinar that I'm going to be doing in much more detail than I can on our program here today. And I'll get you the information on that. That's going to be this Thursday at 7 p.m. And in fact, for those of you that can't wait, take a look at the QR code on the screen there. My August Market Warning Live. If you could take a picture of that QR code, then you'll be one of the first to register for this event. All right. So there's the event for you. And let's go ahead and get started with the program here, shall we? All right. So the biggest question is, can the S&P keep moving higher? Now, I believe it can. The same forces that have been driving this breakout need to stay in place. And we're talking about things like earnings, all right, strong earnings. We got falling yields this week, but we also are looking for stable macro conditions. And right now, those pieces are kind of working in the market's favor. The data supports are more to the upside, but valuation risk is also rising too. So when we look at the latest data, you know, those three things, and I have them on the screen. They're the good news, bad news scenario. Number one, earnings growth running about 29 to 50% ahead on what we call a year over year, depending on the source, depending on the quarter, 86% of companies so far are beating estimates. Now, to me, this is the biggest reason why we're seeing all-time highs in the Dow, in the S&P, and why we see the NASDAQ inching ever so closer to those all-time highs. Why are the Qs not there? Well, it has a lot to do with mega cap. It has a lot to do with AI. You know, they were the strongest earlier in the year. They had suffered the biggest pullbacks, but the leadership remains intact. You got stocks like NVIDIA and Micron. Those two companies alone have contributed probably about 2.5 percentage points to the S&P's gains and are also fueling the fire behind the comeback on the Qs. So you've got that. And that's that concentrated leadership area. Now, the other piece is how many of you out here follow Kalshi? All right. Kalshi is the predictive model, and they're the ones that are behind a lot of the, I call it predictive markets. You might call it betting, right? But the Kalshi traders are now giving the S&P 500 a 66% chance of hitting 8,000 in 2026. I actually think it could happen before that, before the holiday season. That's about 3.5% above where we are right now. And it tells us that traders are still leaning bullish. Now, if you want to add to this, right, look at falling yields. Look at the labor reports that we just saw last week, which are easing rates. What about easing geopolitical risk? Those are tailwinds as well. You got recent rallies are helping treasury yields. They're at that 3.8, 3.9% level. We've got easing tensions between the U.S. and Iran. And I know Iran is denying that it's engaged in negotiations with the U.S. And I also know President Trump says that we are engaging. I think now he's saying we're semi-negotiating. So that's an on again, off again story. It's actually giving us callousness when it comes to the market. But when you take a look at the key risks to me are valuation stretched? Okay. Is there a potential in concentrated leadership that has taken us up that could bring us back? And then are there any macro surprises on the horizon? We've already seen some of them that have been bullish. But the other thing we can look at is we can go out and look at seasonality as we do every single week when we look at the calendar. And I want to look at the calendar right now with everybody. So, as we turn to the calendar we've seen the calendar for August, but as we turn to the calendar for the week, it's looking like this. All right. It's starting to turn yellow. And what I mean by that is that last week we were seeing 70s and 80s in terms of bullishness to bearishness. Now that number's dropping into the 60s, and it's just going to get weaker. And what we're looking at right here are just ETFs. When you look at the stock market, it's downright yellow. But right now we're seeing today, coming into the day, 69% bulls, 31% bears. That's where we run out the week, when we run out from the 10th to the 14th. But here's the big thing. When I rescore these, when I rank these the way I like to rank them, then you know what comes to the top of the list? And it's coming to the top of the list. It was at the top of the list last week, probably be at the top of the list next week. We'll see. But it's the US dollar. The US dollar going out 60 days, taking us now to the end of October, is bullish. How often has it been bullish? How about 10 of the last 10 years? 10 of the last 10 years, we've seen the US dollar up between now and the end of October. We're going out 60 days. This is, if for those you don't know, the US dollar, or UUP, is a blend. It is a look at the US dollar versus foreign currencies. It's a basket of the world's major currencies. So when this goes higher, what goes lower? Those foreign currencies. What else goes lower? Commodities. What else potentially goes lower? The stock market, right? And we've seen patterns. This is, if history's taught us anything, the last 10 years, we have seen patterns in the markets where stocks and the US dollar go higher, and stocks and the US dollar can go lower. That's not always the case, But we have seen that happening as of late, especially in the last 5 years when you have something like COVID that falls into the mix. All right. This is a chart of US dollar right now. I'm going to blow this up so you can all see it. And you can see here that I have applied on this daily chart Andrew's pitchfork. Right. Andrew's not a friend of mine. I don't know who Andrew is. I have a nephew named Andrew, but I like to use this indicator looking at possible points, low to high to low, to give me an upward range like you're seeing there. I also have turned on the velocity cones. These are probability cones that you see there at the end that project out into October. And if I were to take a projection and I could go from, say, conservative to equal, we're sitting around that 28.5 to 29. That is 1 to 2% higher than we are right now. Let's look at 2% as that norm, 1 to 3% if we take the entire range. Well, down the middle, what's 2% worth? 2% is actually worth more than you think. Down here at the bottom, I actually threw the at-the-money call options on here. All right, these are the at-the-money call options with a December expiration date. All right, trading around 63 cents as we came into this morning. Now, if this 28 call, if we were to get to 29 by December, not by the end of October, but by December, then we've got an option that could be worth $1 on something we paid 63 cents on. Not quite a double, but well over that 50% mark. Okay. There's one problem that I have with this option, and it's not that it's cheap or expensive, because it's actually not a bad price. The problem I have is that I'm looking at something that ends in December on a pattern that ends in October. There's a lot of extra time value in there that I don't necessarily need, that actually hurts the reward to risk ratio a bit. So that's the only problem I have when I look at the US dollar and I'm looking at options. Sometimes I can find the best pattern in the world in the stock market, but when I go and pick the options, there's just not something there that I can use. All right. So in summary, here's what I'm looking at here, folks, as we go into the end of our market update. All right. Number one, when I'm looking at my summary, is that August tends to break seasonality in favor of the bears. Now, again, I'm not suggesting that we're going to have an all-outright bear market. What I'm suggesting here is that if we're looking at this, we're seeing that there is a potential here. All right. There's a potential here for the stock market to wind down. Right. That's a possibility. All right. That's number one. Number two, right? Look at the at-the-money call options. They are cheap. But if you know me, I prefer to see an expiration that's closer to October. Now, finally, I've got a live event going on. All right, I have a live event going on that's going to be this Thursday. It's going to be this Thursday. It's going to be at 7 p.m. And what I'm planning on doing in this live event is I am going to get into the details of my August warning. I'm going to get into the details of what I see. And I've got 3 areas that I'm really interested in. I'm interested not only just in the US dollar and the currency instruments, but I'm also interested in much more than that. I'm actually interested in the metals and mining area. I'm looking at a potential area in uranium, of all places. Okay. If you're interested in joining me, then click on the QR code above, or take a look in the comments section, because I have posted the link there to register for this video. All right. And I put it right in the comment section. You're welcome to come and join me as a guest. There is limited seating to this, but like I said, going to get very detailed on a lot. And when you click on that link, it will bring you to my live warning webinar. You can see there, if you register for this, register on in, and then I will let you know when we are live and ready. Again, this is going to be Thursday, August 13th at 7 p.m. Eastern time. And of course, I look forward to having all of you at my live event. Welcome to Patterns and Profits. I'm Tom Gentile, America's #1 pattern trader. If you've ever felt caught in the emotional chaos of market headlines, trading opinions, and meme-driven hype, well, you're in the right place. Here, we trade patterns, not panic, with a focus on profits, not predictions. Here's just one of my repeatable strategies I've used for over 10 years now. It's a seasonal calendar looking at the best days to buy and sell the world's most popular stocks. I have millions of data points over decades of stock prices showing me specific stocks that have a 90% or better historical probability of profit. Adding options on top of these patterns, and you can supercharge your potential returns. And with this kind of data, pattern trading isn't about predictions. It's about probabilities. And when you follow historical seasonal patterns like me, the market becomes much easier to navigate. Subscribe here for tons of videos on high probability stock patterns. And if you want more, scan the QR code above or click the links below and get my daily newsletter. Welcome aboard. I look forward to working with you. Hey guys, welcome back to Patterns and Profits. Glad to have you here again, Monday, August 10th, 2026. I was looking at 12:17 p.m. on the calendar. Glad to have you guys here. Hey, give me some comments on where you see these markets heading into the month of August. I know Ray is asking about crypto influence, and he says, "What about crypto influence?" Crypto is an interesting one because, you know, as we head into the area of September, October, that's going to be October 6th is going to be the 1-year mark where Bitcoin made its all-time high. Now, typically, once we see an all-time high, or we see that those lower highs and lower lows, we're going into crypto winter. Typically, crypto winters end between 9 months and 1 year after the all-time high. But we need some sort of some kind of a catalyst for that. Could the catalyst been cold wallets? Not sure if that has been the catalyst, or could the catalyst for the new bull market be the clarity, the clarity bill, which is still unclear at this time, but I think that's going to actually happen, and we're going to see some clarity on that before the midterm elections. So that's where I see kind of crypto influence going, is that, you know, just when everyone can't stand the price going lower, we start to kind of come out of that funk. I really thought crypto had bottomed in February. I thought we were going to have a quick downside move, which we did, but then we kind of double bottomed here within the last 60 days. Trying to come out of that and get above that 65,000 mark that we have been seeing time and time again. You know, we're bopping above and below the 65K area. We could be in that area for some time, but I really like our chances of being out of that bull market as we head into September and possibly the beginning of October. So thank you very much for the question/comment there, Ray. If you got questions or comments, guys, feel free to add them here in the program, and we ask and answer as many of them as we can. All right. So joining me now is a longtime trader and friend. I met Mike over 25 years ago. That's longer than most Barrages. And since then, he's gotten very good at a lot of things. Optimal trading and adjustments are just a couple of them. He has recently written a book on the subject, which is currently available on Amazon. Please put your virtual hands together and welcome Mike Wade. Mike, how you doing, buddy?
I'm doing great, man. I really appreciate that warm introduction. I talk about you in the same way. I remember when I first called you, I'd gone through all the videos of you and George, and then I approached George to maybe work for you guys, and you called me. And I was like, oh my God, I'm talking to a famous guy. And here I am.
Man, I remember those days. I mean, you know, it's almost half a lifetime ago when you think about it. Yeah. And so, dude, it's you know what, you and I are blessed, first of all, because we're still here, because we're healthy, God bless George for bringing us together, because that's what he did. And there's really not a day that goes by I don't think about him, even if it's just for a brief moment. But, so glad to see you again. A lot of stuff going on, and I wish we had the time. But you know what? You and I are going to get on a live webinar next month, and we're going to get very detailed on everything that it is that you're doing. But, for me, I'm sure you know this too, Mike. I'm not a meme trader. I'm not a day trader. I'm a rules-based pattern trader, and I have been for quite some time. And I know you're in that category too. But first question I have that, a lot for the people that don't know you is, how did you get started? Get started trading.
Well, I started following this cab driver. You might have heard of him.
Oh yeah.
And I learned how to.
He wasn't an Uber driver. He was an actual cab driver for a few days, right?
It was pre Uber, yeah. The money's in the meter drop, and I learned selling naked puts, and that's what I did. And I had a large account, and I loaded up on selling puts on tech stocks, and that was 98. And then by 2000 in March, when the NASDAQ rolled over, I learned about the importance of money management. I got decimated. I had no rules to speak of. I just sold puts on, like throwing a dart, just sold puts on tech stocks, doubled my account in the first year. And then I lost a lot of money in 2000. And that's how I started. And then luckily I saw a commercial of George driving a Bentley in South Beach. I said, man, I like that. I like this idea. And I went to a seminar, Optionetics seminar. And I remember George's, within 5 minutes, Tom, George said, what's one question you need to answer before you get into any trade? And I was like, how much money can I make? No, it's what if I'm wrong?
Exactly.
And that flipped me around. I made a lot of mistakes. I got lucky in the first year with every tech stock and their mama rising. It was pretty easy until everything flipped over.
Yeah. And you know what? One of my early mistakes, you're talking about your early mistakes in option trading, because I went in straight into commodities first, and that was the worst thing I could do. But then I went to stocks, and then I went to options, and I kind of jumped into that area a lot of people do, which is, an option's just like a stock, but it's cheaper. And so I want to show everyone here the mistake I made, and I'm sure you may have made it too at one time. But let's use a current example. So here is SMCI. This is Super Microcomputer, and I didn't have the information that I have right now. And honestly, even if I did, I don't know if I was at the point where I was ready to swallow the red pill and look at what we call the red line here. And so, I would look at just the price. And I'd see the price of the stock, and I'd say, all right, yeah, stock was down here at 20, stock was up here at 50, back down to 25, trading around 31 or change. And I had no idea. And at the time, we didn't even have access to this kind of information. But even if we did, how long would it have been before I realized just how important this is? You could get this information, but it would take a Bloomberg screen and about $3,000 a month to get that. So this is something that we in-house do, is we look at near money options, and we're pricing them every day. And we're looking at, and implied volatility is not something that we invented. I'm not trying to say that. What I'm trying to say is that we look at it differently to most people. We look at IV ranges, 30-day options, 60, 90, 120, the whole gamut, short-term, long-term. And we're able to, based on the range over the last 1 to 2 years, we can get an idea whether we believe, based on these ranges, whether those options are cheap or expensive. I tell folks it's like weather. If you walk outside, and today's August the 10th, if I walk outside in Florida and it's 50 degrees outside, I don't care. It's summer. No, this is the coldest summer on record. It's cold. That's what, that's just like being up in coastal Maine. And it's in the dead of winter and it's 50 degrees. That would be unseasonably warm in coastal Maine. So we do the same thing. We look at where that option premium, that IV, we regenerate that IV and reverse calculate that so that we can get highs and lows throughout the year and get an idea of whether it's cheap or expensive. So, I mean, I would look at things like, for instance, the call options. Here's SMCI, and I'm taking this straight from Hub's website. So here's SMCI. Here's a chart of it. This is a short-term chart. And I got a probability cone on here, which shows me if I bought these calls, these that many calls, they're trading at mid price, I think 200 and they ask us 232 this morning. I mean, there's a 68% probability it's going to be at break even or lower. And that's if it just gyrates back and forth, right? 95% probability between say 34 and down, you've got a huge probability it's going to be that this is going to be a losing trade. There's only a small probability at the top that it's actually going to move higher. Well, what if we bought the puts? And that's what, where immediately the novice brain would go. Well, the puts are going to be no different, because here's the side on the puts. You would have to go, below the $28 level before you start to see some real green. Everything else is break even or even, much more red on the screen. So it got me thinking, the biggest takeaway that I have looking at something like Supermicro, especially going into earnings, because, how many people, and Mike, I'll ask you, did you ever do the strategy? I call it the novice strategy, but we were all there, where you buy something right before earnings thinking that the pop is going to double or triple your options.
I did it one time, just once.
That's good.
Yeah.
That's all it took. You know what happened to me? I did it several times, but when the time it didn't work, it took all the profits back that I made the times before. And I went, wait a minute, something's not right here. And so the biggest takeaway that I want to share with you guys on companies that are going right into earnings, and SMC is one of them right now. Don't make the mistake Mike and I did. Don't buy right before earnings. Both the calls and puts are expensive. They've ballooned up because there's all these folks that are out there taking bets on the call side, taking bets on the put side, and they're blowing up the option prices. Those option prices are going to come down. And typically they come down right after earnings. So we want to show you here, first of all, how to predict earnings price moves. We could take that exact same information. You take the at-the-money calls and at-the-money puts that are just after they expire, just after the earnings, and add those two numbers up. This is your over-under on the stock price. So let's look at SMCI again. Let's get a range prediction right now as we go into earnings. Again, if you've got the calls at 232 and you've got the puts at 218 together, that's called a straddle, buying the at-the-money calls and at-the-money puts. What we're doing is we're not saying to buy the straddle. We're saying right now, use the straddle to predict, get an idea where that stock is going to go. And so this stock really has about an over-under of about 13 to 14% right after the earnings come out. That's $4.50 over a $31 stock, right? Now, the other thing that I want to mention is that if you think buying expensive calls or buying expensive puts is a bad proposition, try buying both of them right before earnings. There are folks out there that push this strategy. They push it on YouTube, and they have no idea what they're talking about. Oh, let's go out and buy the straddle right before earnings. And you know what? They're going to be right every once in a while. I mean, even a broken clock is going to be right twice a day. But most of the time, you're going to end up being wrong. And it's going to be death by not even 1,000 cuts. It'll be death by a couple dozen at the most. For instance, this particular position has less than a 5% chance it'll be at break even, let alone profitability by the end of this week. Why would you want to take a 1 week outcome with something that only has a 5% chance of being right and a 95% chance of being wrong? Right? I would rather put those odds on my more in my favor. And to me, to do that, we have to go out and we have to pencil and pen what has happened in the past. Okay, so that's an important takeaway. What has happened in the past, and so saying that, if you go forward, we have dozens of earnings that report week after week. In fact, the sweet spot is during earnings season, but there's something that's reporting all the time. And we've talked about how to predict these price moves, but how do we find actual trades coming into earnings that make some sort of sense? I mean, for instance, Super Micro is one of those stocks that has earnings. I believe they're coming out Tuesday after market close. You got Rocket Lab that's reporting. You got Kava that's reporting. Plug Power. These are just a few that are reporting this week. These are the ones that are potentially going to have the biggest moves based on that little formula that I just showed you. Take the at the money call, the at the money put, add them together. Take that number and put it above and below the stock price. And that's going to give you the expected move based on what option traders believe, right? To me, it's too late to trade any of these. So the question is, and I'll pose this to Mike, how do you sort the good trades from the bad trades?
Yeah, it's a good question. I'd say the secret sauce that you pointed out already is the IV rush. Here's an example. There's two things. Number one, and what we do differently than, as Tom's already pointed out, than most traders is that we take advantage of this IV, this red line that routinely goes up into earnings. I mean, it's one of the most reliable patterns. And then I want to get on, I call it riding the red wave, Tom. Like, I want to catch the wave at an optimal time before the earnings announcement. And as you pointed out, after earnings, the IV comes right out. So you don't want to be there. We want to get in at an optimal time and then ride that IV wave. So that's one part. And the other is, can we use history to find the stocks that tend to go either up or down into an earnings announcement? And we have that, and it's extraordinarily powerful. So then, Tom, you're making money on the direction the stock goes based on history.
Yeah.
And then you're also you're getting some icing on the cake with the options that you bought earlier, getting more expensive into the earnings announcement.
So it's kind of you're finding patterns of direction, and you're matching them with patterns of implied volatility going upward as well. So that you're really trying to put time on your side, and that's where we do see pockets of time where option theta just kind of disappears for a bit. And that's prior to earnings. And then theta catches back up after earnings because the balloon is popped and the IV craters in most cases. So what Mike's talking about is gathering these millions of bits of information and being able to chart them and being able to rank them at any time. And this is something that we're working on, which is called Optimal Trader. Now, this is we're just putting the finishing touches on this. Right. And so what Optimal Trader basically does is it goes out there and it tells you and it shows you different areas where we've seen past surges in the market, whether that surges to the upside or whether that surges to the downside. The best time to be buying into that surge, whether you're buying calls or puts, because that IV is optimal. Right. The price is optimal. If it's a call, it's optimal going up. If it's a put, it's optimal going down. It's a simple strategy because you're just buying calls or puts. There's no spreads that are involved in this. We're able to get a previous win percentage based on what's happened in the past during these exact time frames. And we're able to get an ROI projection based on the past option price increases. Putting all that together, we're able to get a sheet every day that gives us these opportunities. And so, Mike, like I said before, there is so much. I know this is scratching the surface of what it is you do. You do adjustments. You do something called Sniper. You do a lot of things that we're going to get into. And I promise I'm going to do this not on a live stream, but we'll set up a separate webinar. You and I'll come in. We'll talk about all the things that you do. And how you do them. But let's fast forward to something everybody wants, and that is, if you were to look at Optimal Trader right now, what's your favorite bull opportunity and what's your favorite bear opportunity for the month of August?
Yeah, I've got one on here. They are Viva. Take a look at a stock chart on this stock. It's got earnings coming up. The earnings is actually, I just re-verified on the 26th, which was in a couple of weeks, 16 days from now. But this stock is already running. The IV is already running. Historically, it's if you were to have bought call options on ViiV 18 days before the confirmed earnings announcement, it's important that you confirm the announcement and then enter. In this case, is that 18 days before the earnings announcement? You would have won each of those each of those 4 trades would have been winners, and your average return would have been 184%. That's history, Tom.
Yeah.
And that's one of our best guides for predicting the future.
Well, now let me just interject here for a second. So that 18 days before calendar date is as today, but you're talking about an entry on the 18th and an exit on the 25th. Which is roughly about a week. And then, but you've got one that starts tomorrow, August 11th.
Mm-hmm. Yeah, Baidu. Yeah, Baidu is in a bearish posture already, Tom, and it goes down into earnings. If you get in 11 days before the confirmed earnings announcement, 8/18 BMO before market open is the confirmed date, earnings date. So you'd be out of this by the 17th. You get in on the 11th, which is tomorrow. You buy an at the money put. Baidu might be at a different price tomorrow, but pick the put that's right around the stock price, maybe slightly lower than the stock price, but in that area. It doesn't make too much difference. And then, if history repeats itself, Tom, you've got a potential return on investment of 90% with an 11-day trade. You get in on the date prescribed, and then you get out before the earnings announcement is made. And that way we catch that IV rush, Tom. And then if the stock moves our direction, we'll get what we call the delta effect as well. And history says this is a good deal. And the current stock chart is in a bearish posture.
Awesome. So keep an eye. So guys, what Mike's saying is keep an eye on VEEV as a potential upside trade a week prior to earnings. And keep an eye on Baidu, BIDU, as a potential bearish opportunity. And these are both historical patterns that have repeated over and over again. No guarantee they're going to happen this time around. We don't offer guarantees. We're pattern traders. We're not guarantee traders. All right. But we look at rules-based, repeatable patterns. The repeatable patterns that Mike is showing you are based on event-driven markets and implied volatility, which is options premium. So Mike, before we let you go, let's talk a little bit about what we got coming up. Like I said earlier, I promise I'm going to get you into a webinar next month. I've actually got one coming up this week to talk about what's going on in August. I've got an August warning that I want to make sure I share with everyone, along with my top 3 trades heading into the remainder of August. But and I'll mention that before the close. But if you take a look here, Optimal Trader. So the Optimal Trader, what's coming up? We've got a scan, and we just showed people part of that scan. That's got the finishing touches. That's actually available on Hub. All right, as a premium scan. We've also got the Optimal Trader Alert Service, which is going to be coming live later this month through Gulfport Analytics. Right, so that's going to be right there alongside Money Calendar Pro, right there alongside Cash Flow Trader, right next to Cryptos and Commodities and the new Quantum service that we're doing. This is going to be yet another alert service, and it's based completely on earnings-driven events. And then in September, you're going to be coming back, and we're going to be talking about something called Hedge Fund Mastery, which Optimal Trader is just one small piece of that. So that's going to be a 4-week program you're going to be doing. And I want to get you back in September. We're going to talk about that full program. We'll talk about Optimal Trader. We'll do some more trades together, and then talk about how folks can get into Hedge Fund Mastery. But yeah, absolutely. This is what we got coming up on the screen here, guys. What's coming? Optimal Trader Scan. What's coming? Optimal Trader Alert Service. What's coming? Hedge Fund Mastery. That's what we have coming here in the months of August and September. So, Mike, any final words?
No, Tom, I've been doing this stuff. I started trading in '98, and I'm still doing it. I get on webinars every day in my community, and I love it. I love this game. I've learned a lot from you, and I'm propagating what I've learned. And I'm really all about having this make an impact on people's lives, and we're doing it, buddy.
Well, you are. You got a core group of people that follow you in thick and thin, and it's exciting to see where you are. Good to have you on the program again, and we'll have you back again next month for a for a much more detailed version of exactly what it is that you do outside of optimal trading. All right.
I look forward to
it,
that.
Mike. I really appreciate it. And folks, that was Mike Wade, and he is doing something along with us called Optimal Trader. You'll hear more about that as we head into the rest of this month and into September. Other than that, that is it for me for today. Thanks again for joining me. Have a great rest of your day, and we'll see you again here next week on another edition of Patterns and Profits. Bye, everyone.